Hi everyone, welcome back to The Technical View, where we look at the world markets and world indices from a classical technical analysis point of view, which is just a great way to supplement any other sort of research that you're looking at, or just to get another point of view in the markets and what's going on in the world at the moment. As usual, we'll be looking at the S&P 500, the All Ordinaries down under Australia, which is the market that I personally trade, the FTSE, the BSE 30 in India, and the Shanghai Composite in China, which has caused a lot of stir over the last week, which has been fantastic, and that chart is extremely interesting actually. A few things that we called over the last couple of weeks, which is really cool. Let's start with the S&P 500, and of course it is that head and shoulders. There's your shoulder there, your head in the middle and the shoulder on the right hand side, which everyone has been talking about now over the last week or week and a half. But before that happened, even before that happened, we were looking at this continuation pattern at a solid line of resistance, which is a really common occurrence. You'll get little consolidation patterns at support and resistance. And basically with that pattern, if it broke out to the upside of that pattern, then that would have been a bullish sign. It sort of bounced around within that pattern almost to the letter and then broke out to the downside, which brings our head and shoulders pattern back into play. So obviously we've got the shoulder there, the head and the shoulder on the right hand side. Just for fun, we're going to look at a few things. One is the head and shoulders pattern in 2008 and just sort of compare those two things. And also we're just going to look at targets, just your normal targets for a classical head and shoulders pattern. And again, these things aren't set in stone exactly, but they are, they're the more accepted forms of targets when you're looking at head and shoulders pattern. For example, it's basically from the top of the head to the neckline here. Here we have it here, as you can see, there's the 100% move, and it's really a huge pattern. It's happened over a couple of years now. If price does get to that neckline level and break below it, then then there's a higher probability that move will eventually occur. And obviously it won't happen straight away, but these things, as in 2008, occur over usually a year to 18 months time frames. There's the bottom level, so it's very low, and obviously you've got to take these things with a grain of salt, but the bottom level for that classical head and shoulders pattern target is about 1600 on the S&P 500. Now the reason I want to show you that is just this other thing as well. As you see, the neckline is sloping upwards here, so that is exactly what happened in 2007 until we sort of reached the breaking point of that neckline, when the neckline began to sort of change and take shape and move and slope downwards. Now that was when the real carnage happened, and I'll show you exactly what I mean. So moving just back in time to 2007, 2008, as you can see, it is a smaller pattern here. So and that still caused quite a little bit of carnage during the bear market of 2008. Now we've got our left shoulder, our head, and our right. You've sort of got your right-hand shoulder there. There's your upsloping pattern, but it wasn't until really February or March when things started to break down. And as you can see, the neckline, did change. So we've got our left shoulder, our head type pattern, and then our right-hand shoulder, which is the smaller one typically. Now, if you look, and that's basically, it sort of found support there a couple of times until September, October, when things really came to a head, and that is when things really broke down. As you can see, there's our break of the neckline at this level. There's the top of the head and shoulders pattern there, and there's our technical target of 100% of that move. And so that's what we'll be looking at, the support level. It really did fall to that around October, November 2008. So obviously again, take it with a grain of salt, but that's how you sort of read the head and shoulders chart pattern with the targets involved. Now let's quickly look at the Shanghai Composite in China. This is what's caused, a bit of the stir over the last week or couple of weeks, really since August, if you look at it. Again, you do have that similar pattern, the head and shoulders, the shoulder on the left, head and the right-hand shoulder here. Last couple of weeks, what we were saying was basically the price had moved upwards. However, I wasn't comfortable in calling it an upwards move simply because of the flat nature of this pattern here. Looked more like a continuation pattern downwards than it did anything else. Now, Literally last week, it was starting to show promise of moving upwards, but it could not close above that level, which was sort of your breakout level there. It did peak above it, and then that was when things really started to break down. So if we were to just look at the Shanghai Composite as the next support level, I'd take it from this level here and do that downward sloping neckline on the Shanghai Composite as well. So your next support level, potentially, if it does fall further, would be your 2800 or 2850 sort of level on the Shanghai Composite. And I wouldn't be seeing the uptrend to resume unless it was able to close above that 3660 level, which is what we were looking at previously. Let's jump over to the All Ordinaries, which is the market that I personally trade. Really similar pattern, and again, that's why these things are sort of being brought to everyone's attention, because these patterns are really, happening around the world. We've got the left shoulder, the head, and then the right shoulder as well. And again, if we were to just do that same technical analysis or classical target for a classical head and shoulders pattern, the 200% level, or the 100% of the previous move level, would be about 4,200. Now last week, again, we did have that nice up move, the Christmas rally. That's this move here. What I said last week was I'm not having faith in that move until it makes a higher trough and a higher peak. That's the real test of a move, is if it can make that higher trough and higher peak, even on a daily time frame. And in this case, it definitely couldn't, and that's when the market fell away again. So now we are still looking at that head and shoulders pattern on the long term. Let's quickly check out the BSE 30 in India, and again, this is a similar scenario. It's more of a channel scenario, and this is what we've been calling the whole time on the BSE 30. Last couple of months, basically the scenario was it couldn't break above that channel level, and you'll see that all the time where market finds support and resistance at those trend lines. And what I was personally saying was the next support level would be the bottom of that channel, obviously, and that still stands at around 24,000 on the BSE 30. There's a good chance that this will still continue to bounce around within these levels. If it does break down below this channel, then obviously that's quite a bad sign as well. Now, last but not least, let's check out the FTSE in Europe. And, surprise, surprise, obviously we have a very similar pattern unfolding. You've got your shoulder, the head, and the right-hand shoulder as well. Let's just do a quick target, because we're doing it for every other market. So we've got our neckline, our head. The 100% of the previous move, you could potentially be looking at about the 5,000 level on the FTSE on a longer term basis. And again, you do have to take this with a grain of salt. These things don't happen all the time, as we saw in 2010, 2011, 2012. That pattern obviously stopped short on its right-hand shoulder and continued upwards, which was great. This one is heading down towards the neckline, which is obviously a lot more weakness, a little bit of a worse sign, but you do still have to stay aware and react with the trends as they happen. These targets are just the way that these patterns are typically read. So I hope that has helped you in some small way. It's a great way to look at the world and see what the world markets are doing, what's happening with them around the world from a technical analysis point of view. Stop by the website, it's asxmarketwatch.com. A lot of free stuff, free videos, free trading system courses, and and coding courses in Ami Broker as well. Great stuff. Happy trading until we meet again, guys. Have a great week. Bye for now.